Great joy to congratulate you on your admission and welcome you to the Department of Accounting, Faculty of Economics and Management Sciences, University of Ibadan. As a pioneer undergraduate student, I wish you a successful and rewarding academic session. My name is Dr. Abosede Tiami. For the purpose of LMA study, I shall be taking you through Principles of Accounting 1 and the course code is ACC 101. So we'll be looking at the course outline, which includes historical background of accounting, the need for accounts, different branches of accounting. We shall consider the definition, nature and steps in financial accounting. We'll be looking at the qualities of a good accounting information as well as the users of accounting information. At the end of the study, students are expected to be able to define accounting, give us historical history leading to the development of accounting, tell us the benefit associated with accounting as a profession, give us those attributes expected of financial information and the beneficiary of financial information. So going by memory lane, history has it that accounting has been in existence for several decades. But for purpose of record, it dates back to 1494, during the period of an Italian man known as Luca Pacioli. He wrote a book titled Summa de Arithmetica Geometrica Proportione et Proportionalita. In English language, it is translated as arithmetry, geometry, proportion. So the author laid emphasis on the principle of double entry system. And by double entry system, it is a bookkeeping and accounting method which states that every financial transaction has equal and opposite effects in at least two accounts. In summary, for every debit entry, there must be a corresponding credit entry. With the double entry principle, the Pacioli man is of the opinion that managers are to report to owners of businesses at any period under review. Usually, the period under review is known as an accounting year end, which normally run or span for a period of 12 calendar months. However, companies are at liberty to choose when the accounting period should be. It could run from January to December. Others may opt from March to April of following year. Others might choose June to July the following year, and what have you. However, what is more significant is that the report, as presented by the management, is expected to reflect the following. First and foremost, the organization resources. How have they been utilized? How has the resources been invested? And whether or not profits were realized as a result of utilizing those assets, or whether companies sustain some losses. Then the resources assets owned by the enterprise, the liability as well as owner's equity are expected to be reflected in an accounting year. Between 1494 and to date, a lot of changes has taken place as far as accounting profession is concerned, and these changes were informed as a result of sophistication and complexity of businesses, industrial and political environments, which put more responsibility on the management to make more disclosure to various stakeholders. When we say stakeholder, we refer to individual or group of individual that can affect or be affected by the company. They can influence or can be influenced by the company. These are stakeholders in an organization. However, at the inception, the quantum or the quantity of accounting transactions was so few and limited. But as we speak now, as a result of expansion and complexity coupled with the advent of ICT, businesses are recorded in volumes. So this places more pressure on the management and the need to have adequate information for the stakeholders. Then between then and now, a lot of accounting principles which guides in the preparation of accounting statements have also come up. They have been subjected to series of review by relevant agencies of government. Accounts have to be prepared and reported on as presenting a true and fair position of the enterprise. As we advance in our discussion, we will see what the true and fair position represents and who has that right or to give that opinion or verdict on a financial statement. So going by the definition, we have bookkeeping. What we refer to as bookkeeping is a recording phase of accounting. We can't talk of accounting without making reference to bookkeeping. Of course, accounting transaction has to be documented. So there are usually some set of individual assigned with that responsibility, and it involves classification and recording of business transaction in the book of account on a daily basis, meaning that every transaction involving exchange of money transaction must be documented in the appropriate books of account. So after documentation, accounts can be prepared. So by definition, accounting is the art of recording, classifying, summarizing, analyzing financial transactions of a business. All the transactions that has been documented by the bookkeeper, they can now be classified according to their various heads. They can be put in summary form, they can be analyzed and interpreted to take an informed decision. So what are benefits of accounting? So if we talk about accounting, what do we stand to gain? What do we stand to benefit or derive from it? One is that it aids at recording. Accounting is to maintain systematic, accurate and complete record of all financial transactions of a business. So having a detailed transaction of an organization enables us to revisit past transactions, and we can relate past transactions with the current to be able to make projection into the future. Equally, accounting assists in the area of budgeting, and budget is an estimate, annual estimate about expected revenue and proposed expenditure of an enterprise. So accounting assists in setting the company financial budget, which compares and combines previous year data and current one to be able to make projection. Also, accounting entails compliance with laws and regulation. Business must comply with government laws and standards as may be issued from time to time by relevant agencies of government. Business activities and performance also. Accounting assists in planning, in controlling and evaluation. Accounting has so many branches, and we often refer to it as scope of accounting, and these include financial accounting, which is process of recording, summarizing, interpreting and reporting financial transaction in a time period. So accounting is concerned with provision of accounting information to both internal and external users. So I have defined who a user is, that can influence or be influenced by the activity of a company. So they are in two categories. We have those we refer to as internal, we have those external. The internal are people within the organization that get involved in day-to-day administration of an enterprise, while the external users are outsiders who do not involve in daily administration of an entity. Another branch is cost accounting. This is concerned with the accumulation of data to provide information for managerial actions. Of course, the managers or management, they require information to take decision. So without appropriate information, they will not be able to take appropriate decision. So it is part of duty of accounting through cost accounting to provide the management with accurate data to enable them take managerial actions. We have performance management. This has to do with continuous interaction between the manager and employee to put efforts together in planning, monitoring and reviewing the effectiveness of workforce towards achieving business overall objective. Of course, in an organization there are unit heads, and there is chances that each unit head might want to pursue an objective that is self-serving. However, with the performance management, all the unit head including the management staff are expected to work hand in hand to promote organization overall objective. Auditing is another branch of accounting which necessitates examination of financial statement by independent auditor. Like I alluded earlier, I said the report presented by the management has to be evaluated by an independent person. That independent person is known as the auditor. He must have his opinion on the financial statement whether or not it convey a true and fair position at a particular point in time. Taxation also is a branch of accounting which provides the basis for determining the taxable profit of a business outfit. We have the financial management. Its own concern is about the efficiency and effective use of resources by the management in the manner that maximize the wealth of the owners. The business owners, they have invested their resources, they have invested their time. At the end of the day, they need to be compensated through certain returns. So there is the need for the management to ensure that their wealth is maximized such that they can be adequately compensated. Forensic accounting as part of scope of accounting involve application of accounting skills to investigate and probe fraud, deliberate misrepresentation of entity resources with a view to recovering such funds through legal proceedings. So when it is suspected that a fraud has taken place or somebody alleges that fraud has been perpetrated, we can engage the service of the forensic experts to interrogate, carry out investigation, and brought the perpetrator to justice through legal means. Then social and environmental accounting as a branch of accounting. It deals with the accounting for and reporting of social and environmental impacts of an entity activity on the environment and stakeholder. So with the social environmental accounting, when the business is situated in a location, the security of lives and property of the residents there becomes that of that organization. They must be responsible and they must ensure that the environment is protected regardless of their activities. For instance, we have some companies that emit harmful substances into the atmosphere, causing climate change and what have you. Companies should not do that, such that the residents in the area they do not become compromised health-wise. So company must ensure that standard regulation are in place to ensure the safety of the residents. Then I spoke about the attributes of a good financial information, the quality. That is when we say this is a financial information, what are we expected to see? We have this in two categories. We have fundamental characteristics, we have qualitative characteristics. So under the fundamental is divided into two. We have the relevance. Accounting information must include enough facts to satisfy the curiosity of the users. An account information will be considered to be fine, to be okay, to be adequate if it can meet the yearnings of the users of accounting statements. So information is relevant if it can make a difference in the choices or decision made by its users. So when you have an information that cannot influence your decision, or without it you can take decision without feeling that something is amiss, then that is not a good accounting information. But one that is influential, that can affect your decision, that can influence the next line of action to be taken, is said to be a good financial information. Then we have faithful representation. Financial information must faithfully represent the phenomenon it purports to represent. Information must be complete, it must be neutral, and must be free from error. So to say a financial information is accurate, it should be devoid of error. There should not be any form of error, either error of omission or commission. So as we progress, we are going to see what error represents and its various forms. Under the qualitative characteristics, we have comparability. This states that there shall be no changes in basis for preparation of accounting information. Comparability is quality of financial information that allow a choice between alternatives. So, a financial information that is considered to be good is one that can be compared either with previous report or subsequent report to be presented by the management. So any report that gives us that opportunity to compare and take decision is said to be of a good financial information. Then verifiability. An independent person should be able to verify the financial information as that was presented by the management, and it must capture what exactly it's expected to capture. Then timeliness. Account information must be made available early enough for its use. This suggests that user must be given the relevant information needed to take economic decision on time. So when information is not forthcoming when it is required, it is not meeting the purpose, and that is a bad attribute of accounting information. It must be timely to meet the need or the yearnings or the aspiration or curiosity of the user. Understandability. Account information must be devoid of ambiguity. It must be presented in a language that can be comprehended and easily understood by its users. Then we have the users of financial information. This includes but not limited to the following. Governments are in need of accounting information for purpose of physical policies. Governments are to provide amenities for the members of the public. They require data, and they can get data through accounting information of a company by being able to identify the taxable profits of a company and levy the company appropriately for the purpose of tax which will be remitted to government cover, and this can assist government in making provision for its citizens. Members of the public, general public, including you, my students, and myself, Members of trade union they need accounting information, but why they need it varies. So as a trade union, they might need a copy of financial information to see the safety of the workforce. The workforce, whether the employee are working in a safe environment. The union will be interested in a copy of financial statement. What are provisions in place for the union member or for the employee within the organization? That will be the concern and the focus of the trade union. Then business owners too, including the sole proprietors, partners and shareholders, they need information to assess how efficient the management is performing. A business that is run by a single individual is known as sole proprietorship. So the owner is a sole proprietor. A business that is run by two or more individuals for purpose of profiting is known as partnership form of business. The business owner are the partners. But a business that is run by RAs, that is different individual, is known as the owners are known as the shareholders. So all of them, they want to see how the management, those who are representing them, is performing with the resources committed to them. So trade payable, these are people who supply goods to the business on credit. They desire financial information to know the ability of business to pay for the goods supplied to business as when due. There are some people, we refer to them as creditors. They make goods and services available to a company at a credit, hoping to have their pay at an appointed time. So they want to see the ability of the company to meet its obligation as at when due. They will be interested in a copy of financial statements. Also, we have the customer. These are people that buys goods from the company. They want to be sure of the steady access of supply from the company. If they can get the goods as at when required, they want that assurance and reassurance over time. Also, employee within the organization, they want to know what are provisions in place by the management to ensure job security and their general well-being. So it is also of concern to them what the content of financial reporting is saying. The management who manage the business on behalf of the owner too, they want to ascertain the efficiency of their policy. How right are the policies taken so far? How appropriate are their policies? Are there needs for some reviews? Are there area of weaknesses that needs to be worked upon? So the management will get all this information through a copy of financial information. So for purpose of recapping, we have spoken about the historical development of accounting. We laid emphasis on the relevancy or importance of accounting. We try to take a look at the bookkeeping and accounts and see the area they are intertwined. We look at the peculiar is position on the fact that the management should provide adequate information from time to time to enhance the decision to be made by the user. And we have looked at the characteristics, the attribute, the quality of those information. It must be timely, it must be relevant, it must be comparable, and so on and so forth. I want to appreciate you for listening, and I hope to see you in my next class. Thank you. Enjoy the rest of your day.